Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are talking about a $3 electric vehicle stock that can surge to $23 per share. We're going to be going over what this company does, the vehicles that it's making, when it's going to start ramping up their production, and we're going to go over if I personally am invested into this company. And this company is named MULN Automotive, ticker symbol MULN. So MULN is most known for their MULN 5, which is going to come out in 2024, and it's an electric e-SUV, and it's going to be a luxury car. So it's going to be a mid-size luxury vehicle that is meant for families. So this electric vehicle is going to come with a 95 kilowatt hour battery, which will allow the vehicle to travel 325 miles or 523 kilometers on a single charge, and it can charge 80% of its battery in just 21 minutes. The MULN 5 is capable of reaching 0 to 62 miles per hour or 100 kilometers per hour in 3.2 seconds, which is extremely fast. However, the top speed for this SUV is going to be 155 miles an hour because it's going to be electronically limited, which would equate to around 250 kilometers per hour. The MULN 5 RS is also coming out, which is going to be able to go 0 to 62 miles an hour or 100 kilometers per hour in just 1.9 seconds with a top speed of around 200 miles per hour, which would actually give the Tesla Model S Plaid some competition in terms of a very fast electric vehicle. So now that we know a little bit about these two vehicles that MULN is going to come out with, specifically the MULN 5 and the MULN 5 RS, how much are these vehicles going to be, and when could we see these vehicles on the road? So for the luxury crossover SUV, it's going to come with level 2.5 advanced driver assist systems, also known as ADAS, active noise cancellation, and a luxurious interior with very soft cushioned seats. The base version for this e-SUV is going to start at $55,000. However, the touring version of this vehicle is going to cost around $75,000 to own, which is still very competitively priced with other luxury SUVs. However, on the flip side, the more performance-oriented MULN 5 RS is going to cost over $100,000. Production is scheduled to begin in 2023 in Mississippi, and deliveries are anticipated to start in the second quarter of 2024. MULN already accepts deposits for their vehicles to pre-order these cars for just $100, and the $100 is completely refundable. On top of that, these cars have also won some very good rewards. Specifically from the LA Auto Show, the MULN SUV was actually rated as the best zero emissions vehicle, and that is a very good title to have. However, let's dive even deeper into this company. So right now, MULN is a startup company, and it's a pre-revenue company. So that means that this company generates absolutely no revenues, and for me that's an automatic no for an investment in my personal opinion, which is why I personally will not be investing into MULN. On top of that, year to date the loss of the MULN stock is around 58%, but with that being said, recently over the last 5 trading days it has surged by around 40%, and the momentum for the stock is still going. So many traders and retail investors have flocked to this stock, some for a long-term investment, but the majority of them are trading off of the amazing momentum. However, this momentum in my view is not sustainable for the long term. The explanation for this recent momentum in the MULN stock was basically because this company has been featured on a plethora of social media sites, companies, and multiple retail investors are talking about this company on both Reddit as well as FinTwit. Recently, articles have come out about them on Seeking Alpha and CarBuzz, which is generating a significant amount of hype from this very small micro-cap company right now. So if you want to trade a stock, maybe MULN would be a good opportunity for you to get in and get out very quickly with profits intact. However, for a long-term hold, I think we should be very cautious about this company, and I'll go into why that is when I go over the bad news, such as right now. So they're not going to release cars until 2024, and right now the electric vehicle market is very saturated with top-tier players as well as many smaller players. And by the time that MULN actually starts to ramp up production, if they actually get to that point where they start making revenues, the electric vehicle and EV market is going to be extremely and exponentially more competitive at that time. So MULN is clearly behind the 8 ball in terms of electric vehicle technology. However, one good thing is that MULN actually has very good battery technology that we will talk about later, and they also have very good fast charging capabilities and better driving range for their vehicles that are coming out in the future. There's also speculation on Reddit that this stock could experience a short squeeze because of how much it has fallen in the last year. But I don't invest into companies based off of investor sentiment, and I also don't invest in company based off of recent momentum, which of course I think will crash eventually. I like looking at the fundamentals and financials of a business, which we will touch on in this video, to determine if MULN is a good overall long-term company to hold. Now, many retail investors like MULN because they have performed a multitude of various acquisitions, including acquiring CarHub, which is an artificial intelligence-based platform that lets customers buy and sell their vehicles. And although this is very smart of MULN to diversify their overall revenue base, I don't think it's enough to actually invest into this company, at least not right now. On top of this, the popularity of MULN has exploded on a plethora of social media outlets, which is increasing the overall trade volume for this stock. The last time I looked, MULN has experienced a volume of hundreds of millions of shares being traded each day, which is absolutely amazing. However, the majority of these articles are all surrounding MULN's battery technology because they are developing a next generation solid-state polymer battery instead of the classic lithium-ion batteries. And according to their management, they can make a vehicle that can have around 600 miles of range. However, the only problem is that this vehicle is going to be released far in the future, and by that time, we could see a plethora of other electric vehicle companies such as Tesla, Lucid, and even Rivian already have 600-mile range vehicles by the time this vehicle or battery is actually fully developed. With that being said, this is not overall bad news because, again, we have to take into consideration that this is an early stage startup company, and some long-term investors think that investing into the company now will lead to exponential returns in the future, including one analyst that we're going to talk about who believes this $3 stock can literally appreciate to $23 in the span of just 1 year. Now, if you've been on this channel long enough, you know that I really like evaluating companies and their attributed stock prices with a DCF model or a discounted cash flow model, because I really value net income as well as cash flow. However, because MULN is only anticipated to release their first vehicle in 2024 so they can actually start deliveries, their first net revenues should only be in the year of 2024, and without solid fundamentals and financials, it's really hard to get an accurate price target and price prediction for this company because it's such an early stage company. However, the author of the Seeking Alpha article actually says that he anticipates to see positive free cash flows in 2029, and for me that's an absolute no-go because I think there are many other electric vehicle companies that are currently trading on the stock market that will give me fantastic returns from now until 2029. Some investors are even comparing MULN to Tesla, which is an absolute joke. Even management at MULN says that they are not comparable to Tesla at all. So to compare MULN to Tesla is not only an insult to Tesla, it's also way overshooting MULN's technology and their current manufacturing capacity from their manufacturing facility, which is currently around $8 million, which is actually appreciated very nicely. Now, without boring you with all the fundamentals and financials that I have read in a plethora of different articles, basically MULN is paying an extremely high interest rate for the debt that they have accrued just to keep the company afloat, and they are not bringing in any revenues, and they're going to eventually have to generate more cash and income just to make sure that the company lasts until they start selling vehicles. However, despite this, there is a financial advisor that says that the company is going to be worth $23 per share by the end of the year. Now, I personally am not really sure how he calculated this price target, and it's not clear of how he did this, but apparently he is very bullish on this company, but it's a risk I personally am not willing to take, at least at this time. Now, I could change my mind in the future once MULN actually starts to generate revenues, some positive EBITDA, or even some cash flows or free cash flows for that matter, but but until then, it's really hard for me to give a price target for this particular company, which is why I'm going to stay out of it. The article says that the one analyst that offers the 12-month price forecast for MULN Automotive Inc. has a median price target of $23 with a high-end estimate of $23 and a low-end estimate of $23. This would mean that the median estimate represents a 1,269% increase from the stock's current price, which was, when this article was formed, only $1.68. However, right now, as of this video, it's sitting at around $3 per share. The author of the Seeking Alpha article also says that they don't believe that MULN will generate over $1 billion of revenue until 2032. And even though I am a long-term investor and I love holding companies for the long term that I'm never going to sell, this probably won't be one of those companies, because $1 billion in the electric vehicle space is absolutely nothing, especially if we can compare them to other companies such as Tesla and even any of the Chinese electric EV makers such as NIO, Li Auto, as well as XPeng, all of which I own because I am a big fan of the electric vehicle market, especially the electric vehicle market over in China. I also have some exposure to some electric vehicles that are over in Sweden, on top of the pure electric vehicle plays that are here in the United States. But that's just saying that I'm very familiar with electric vehicle companies, and MULN is just not doing it for me. The risk to reward ratio is just not clear here. I don't have enough financials or fundamentals to actually have a proper price target for the company, and I don't understand how that financial advisor and or analyst calculated a $23 price target, considering that MULN's financials are very unappealing right now, and they're going to have to take on more debt or issue shares or dilute shareholders or do something of that nature to raise more funds for this overall company, just to keep them afloat from going out of business despite all of their recent acquisitions. So my personal opinion is I am not going to buy this company. However, if you want to trade this for a momentum play, feel free to be my guest, but remember to go out and get out of this play in time so you can maintain some profits. But to me, the stock is so risky, I'm not going to do that either. I'd rather have this company pass me by and me invest into other electric vehicles that have much more solid fundamentals. But with that being said, I could always change my mind. I'd love to hear your thoughts and comments down below. Smash that like button right now for more videos like this one, and I will see you in the next YT video.